Hello, Dallas, Fort Worth, B-Sides. My name is Kenneth Gears. I work for Very Good Security, and I have some credibility with the audience, I think, because my grandfather was a police officer in Houston for 44 years. This talk is about cryptocurrency, specifically about its strategic potential to change the world politically, socially, financially, and in particular, I want to ask a question that may be a key indicator in the future. Can cryptocurrency be a real currency, and might it even replace the US dollar as the world's reserve currency? So you've probably seen a chart like this. It displays that in 2010, somebody could buy a pizza for 10,000 Bitcoin, what actually happened. And today, that same Bitcoin is worth $500 million. I mean, I feel like I could buy the Tyrell Corporation, right, with that kind of ROI. So clearly, some people are going to get very rich on Bitcoin. And some people, like you, may choose to invest. So at least one of the things I want to leave you with is what are some of the general security considerations to think about if you're going to invest in this technology. So here we have some things in the news just from Google News today, right? We have celebrity power, a couple of quarterbacks, right? Tom Brady and Aaron Rodgers pushing cryptocurrency. We have some political power. Rand Paul, El Salvador, kind of weighing in on the potential and even maybe setting some of the mechanisms in place for cryptocurrency to be recognized by governments, to become what's called legal tender. We'll get to that shortly. And community power, this Shiba Inu coin, which is currently number 9, right, in value on the list of cryptocurrencies, shows that a group of people who just might agree or like a certain concept can actually put faith in a certain cryptocurrency, right, for their own community, which is quite instructive. Then finally, Squid Game. You know, do we wind up with a situation in which we have a few winners and very many losers? So when we think about what is valuable and what's not, let's maybe go back to World War II and think about, in a time of crisis, right, where do people go and what do people do? And it turns out sometimes when civilization is seen to be quite fragile, as in a time of crisis, assets get hoarded and stolen and moved really quickly. So when Germany's invading the other countries in Europe, England and France got all of their gold together and shipped them either to the United States or to Africa in daring, adventurous operations that are Hollywood level, right? So what makes something valuable is not always easy to understand. Some things historically, like shells and salt that were bartered for goods and services, they had a value because they involved a proof of work, that they were found and extracted through manual labor. Gold is really interesting, right? So if you take the whole periodic table and you start taking away things on the periodic table that are poisonous, radioactive, corrosive, too rare, that sort of thing, pretty much you wind up with gold and a few other things like silver, but not many, right? So there's a reason why gold is so valuable and why governments hoard it, and they keep it as a store of value over time. Well, thank goodness that we're not always at war. After the war, right, the Allied powers got together in New Hampshire, a place called Bretton Woods, and came up with a plan for the post-war world economy. Now, the United States was the world's biggest military power, also had the largest gold reserves in the world. So they came up with a plan where the dollar would be backed by gold, pegged to the price of gold. In other countries, their currencies would be pegged to the US dollar, right? So it was a system of dependencies I'm sure you're all familiar with that's reliable, right? In any case, after the war, the United States dollar was crowned the world's reserve currency, right? So if you're in another country, you had your currency, but you also had the US dollar, in which you could trust as an anchor, as hard currency, and something that you could rely on was called a safe haven currency. In case you had economic trouble yourself, your faith was in Uncle Sam or in the United States to provide an anchor for your economy. So at this point, you might be saying, well, why the heck do we need money anyway, right? So let me just spend a couple of minutes on this topic. Money is considered to be a human construct based on economic consensus and social convention. It's something that is used to exchange for other things like goods, services, and taxes. Over time, there became a standardization in the size, in the shape, in the weight of currencies so that it could be, seen to be real. And there's a concept of legal tender in which businesses are required to accept your money. So you may not know this, but in a coffee shop, before they make your coffee, they don't have to accept your money. After they make your coffee, they do. Maybe not in Texas. You've got your own rules down there. In any case, in China, we have seen metal coins as old as 3,000 years and paper money in China as old as 1,000 years. Good money, as you can imagine, you need to be able to rely on it. Right? So it's scarce, authentic, durable, portable, and stable. Now, digital currencies, if they are to succeed, they need to have some of these or all of these same traits, right, that have become part and parcel of what good money is. Now, I'm sure this is coming in the future because, if you think about it, most transactions in the world, even in US dollars, are simply digital transactions. You don't, more often than not, you don't spend dollars anymore. But you go in and you have a card and they hand you your coffee, and the two balances on ledgers are one goes up and one goes down, which we'll get to in a second. So money, as you probably know, equals power. The United States has the largest gold reserves. Other countries put their trust in the United States, and so they invest in dollars, and thus the US. More than half of the world's reserve currency is in US dollars. Now, this gives the US incredible political benefit, right, as well. The world benefits from stability, relatively low inflation, devaluation of the dollar, a managed supply of dollars, liquidity, they can use the dollar, gives them access to markets and trust that they might not otherwise have. But the United States has some special privileges, right? Being the world's banker, really. So the United States can monetize its debt to an extent that other countries can't because we can print money and other countries can't, right? So we can run greater balance of payments deficits. We can pursue policy objectives that other countries can't. And this has been called, quote, the exorbitant privilege, unquote, right? That some countries have been unhappy with the United States having such built-in advantages. But this is the way it's been since World War II. right? So one of the ways that you can understand this is via the U.S. military, right? So during the Cold War and beyond, the United States has provided a security umbrella to the world that we can afford, right? We have the most assets, so we have the biggest military budget. Of course, in the past few weeks, you may have been seeing in the news that this may be changing relative to the rise of China's military, but that is something that is for the future, perhaps. But speaking since World War II, even then, other nations wanted to change this, right? France, in particular, was not happy with this. So the United States also couldn't sustain this forever with things like the Vietnam War, the New Deal. By 1971, it was clear that the United States needed to make some changes. Right? So the United States ended the convertibility of the US dollar to gold. We sort of broke the deal, right? We let the US dollar float. It became a fiat currency, no longer backed by gold. And so this idea that was developed at Bretton Woods that the dollar would be pegged to gold and other countries would be pegged to the US dollar, and thus, by extension, pegged to gold, no longer held. Right? So that's why some big shot financial firms like Goldman Sachs in the past few years have warned that the United States may lose its coveted dollar world reserve currency status. And that's what we're talking about today. Now let's talk about the three essential elements of money that cryptocurrency coders are going to have to strive for, and investors are going to have to look for. The first is medium of exchange. This refers to something as an intermediary token of a certain value that can be traded for goods, services, taxes, and it's beyond barter, right? So you may have oranges and I may have apples, and we get by trading those for a while, but eventually we want an intermediary token that represents a certain number of apples or oranges. Sometimes this can be hard to predict, right? As we said, money is a societal and economic convention, it's a construct. I've been living the past couple of years in East Africa, and there was a story there that really is fascinating. It's people began to trade cell phone minutes as currency, right? Go into the shop and say, hey, I want this. I'm going to give you this many cell phone minutes. And that became easier to use sometimes than cash. And this was so wildly popular over the years that it turned into a major multinational corporation called M-Pesa. So societal adoption is key, and it goes back to some of those things we all learned in information security school: usability, functionality, and security. Does it have a balance of those elements that users can believe in and users can leverage for their needs? The second element we'll talk about is unit of account. So this is a stable measure. Costs, prices, profits, performance, all of these things we want to measure in units that we can understand. So the value of the stable measure is not only for goods and services, but as we get more sophisticated in terms of economics, assets and liabilities. So double entry bookkeeping is key, right, to understanding modern finance and also cryptocurrency. There's a credit side and a debit side that need to stay in balance. And double entry bookkeeping was seen to be a powerful enough technology that it literally helped Europe to emerge from the Dark Ages and forms really part of the heart of capitalism today. So a ledger, right? This is key to understanding both, traditional finance and cryptocurrency. A record of economic activity, financial relationships that everybody can see, right? This is key to blockchain. It's older than writing for communication. The very first writing we have seen on bones in Africa was related to counting and looked to be long distance counting relationships. So a good ledger is immutable, time stamped, it shows ownership, and it's accurate. So modern payment systems typically are about amending ledgers. So again, when you go in for your morning coffee, your ledger sinks and the coffee shop's rises. And some of this relates to the differences between cryptocurrencies like Bitcoin and Ethereum, and Bitcoin is more transaction-based and Ethereum more balance or ledger-based. The third and final essential element of money is store of value. So good money should be a durable asset that has stable demand over time and saved purchasing power, right? This counters the risk of inflation or devaluation. United States dollar has achieved remarkable results in this category. And that's why it's the world's reserve currency. Store of value is a lot about risk management. So many countries believe in the US dollar that they have officially adopted the US dollar as their currency, official, alongside their own, to include Cambodia, Ecuador, Lebanon, Somalia, Zimbabwe, and others. But this third and final element of money may be hard for cryptocurrency to achieve due to the volatility that we have seen in the value. The lack of central management of cryptocurrency is precisely what people like about it, but it also may make it difficult for cryptocurrency to achieve the status of good money and of reserve currency level money. So let's return to gold a little bit and compare how countries are trying to manage their economies relative to the dollar as well as other things, and see where cryptocurrency might fit in. So Russia today has an antagonistic relationship with the United States, and it makes it a good case study for us. Putin would like to de-dollarize the economy and lower Russia's vulnerability to US sanctions. Currently, it's the biggest state buyer of gold, and in January of this year, gold surpassed the dollar in Russia in terms of its holdings within Russia. So 23% of its reserves are in gold and 22% in dollars. Russia's cryptocurrency policy, though, should also be seen from the standpoint of politics. I think authoritarian governments are going to have their own concerns relative to cryptocurrency because it's a lot about giving power and freedom and independence to civilians and citizens. And dictatorships aren't typically about that, right? Telecommunications are used to make money, but also to surveil, right? And so giving up both of those things are not something that a dictator is going to do easily. Little things too, like Navalny had a lot of Bitcoin donations after his arrest. These kind of things may upset a government. So as in some autocratic countries, Russia has, to some degree, banned cryptocurrency, prevented Russian politicians from owning cryptocurrency, stifled mining, even while exploring, whether it can adopt these things from a centralized standpoint. But again, that's sort of at odds with what people like about crypto. Some of the allegations on the criminal side are that, contract killers could accept sort of anonymous cryptocurrency deals. Revolutionaries, like in January 6th, were said to have received Bitcoin donations from abroad. the question of whether terrorists could use Bitcoin for operations, anonymously. All of these things are going to concern law enforcement and counterintelligence. And it's just one thing that cryptocurrency investors need to keep in mind. Governments like power. They have something called this monopoly on the use of force within their territory, whether it's a state or a province or a country. And they're not going to give that up lightly. I worked for NCIS for 12 years, law enforcement, and when you look at the world from a law enforcement lens, you think, well, I have to enforce laws within this jurisdiction, and it's just important for me to be able to do my job, right? And so there's always a tension, right, between citizen and state. In Russia, some of the things that make the internet users wary have been Russian domain names and Cyrillic in URLs. They haven't wanted that, a lot of young people, because they think that it's either going to be a digital USSR. In the same way, Russian state cryptocurrency may not be what Russians want, but we'll see. But these case studies are really interesting to watch, to see how politics and economics, which are intimately tied, of course, how it plays out in different parts of the world. So cryptocurrency, let's talk about, historically, 1974 we had Ethernet and TCP/IP, 1990 HTTP, 1996 SSL TLS, 2009 Bitcoin. These are all programmable transactions that are building on each other, right? And so any good scientist you've heard says, I stand on the shoulders of giants. It's important to put things in perspective and to understand that, we're taking one step after another toward the future. So the challenge with cryptocurrency is how to verifiably move value across a decentralized network. And so there's just certain engineering challenges, right, that need to be overcome. We'd like to do it person to person with no trusted intermediary. Is this possible? We want to do it with no double spending. We want to lower what's called, in economics, the cost of trust, right? So that you and I can trust each other on the web. These are called the economics of verification. Some past cryptocurrencies have failed because one or another of these pieces was missing. But with Bitcoin and blockchain, we may have a consensus protocol, right? That with good cryptography, proof of work, a native currency, and a reliable network of nodes, which came about in 2008 via Satoshi Nakamoto in his paper, Bitcoin, a P2P electronic cash system, right? Did we achieve this stuff? Some of the things that we built on that were foundational, or that Satoshi built on, asymmetric cryptography, hash functions for integrity and tamper resistance, digital signatures for consent, append-only timestamps for the blocks, and a distributed consensus algorithm, right, that one can believe in. In theory, these things could secure the entire internet with verifiable and immutable transactions. And so what some promoters of Bitcoin have said that this even solves age-old conundrums like the Byzantine generals problem, in which you have different units that just before an attack really can't communicate with each other because of, they want the element of surprise, but they have to trust each other, right? And so it's been an age-old problem, but if Bitcoin and blockchain can even solve the Byzantine generals problem, well, maybe we're there. The cool thing about Bitcoin and blockchain is that we could move anything, right? It's a human network almost where you can move not only money but assets across the internet. And after 2008, now we've got well over 1,000 cryptocurrencies and initial coin offerings. So the technology appears to be there for a lot of what we want. And you can see the picture of Shanghai here. And China now is largely cashless, as well as other advanced economies. In 2019, over 80% of payments were via Tencent WeChat Pay or Alibaba Alipay. They're buying much less gold than in Russia, and so seem to be more pushing toward cryptocurrency and blockchain. President Xi has called for investment and development in these technologies. And soon, in 2022, in the Beijing Winter Olympics, there will be a digital yuan test, right? But still, we're talking about an autocracy that likes to maintain control, right, over China. So there have been cryptocurrency curbs and a stifling of mining to some degree, although most of Bitcoin is actually mined in China, right? So these countervailing winds are present, in certain places prominently. But if China could develop a cryptocurrency that other countries would use, right, that would then perhaps chip away at the United States' advantage in terms of a reserve currency. And then maybe other parts of the world would see China's cryptocurrency as something that would be more attractive than the US dollar to hold for a time of crisis or for a safe haven. So a word on blockchain. So for cryptocurrency, it needs rails to ride on. Crypto is the digital asset, but it's stored in a decentralized online ledger, right, that also has solid cryptography. It's a transaction ledger that's public, distributed, and secure based on a consensus communications protocol, block validation. For Bitcoin, it manages the creation of coins and verifies the transfer of coin ownership, also invented by Satoshi. It has a technical input and output that are important to know a little bit about, stuff like previous transaction ID, index, signature, unique output, public key Bitcoin address, values that can be verified, etc. Lock time. It's an auditable database, a list of records or blocks tied together with math and crypto, timestamps, append only, that are tamper resistant. The kind of thing where it's a house of cards failure, right? You can't really break it, otherwise the whole thing breaks. And of course, the proof is in the pudding, but over time, of course, enough people attacking it sort of yield faith, right, in the technology. Mining. This is one of the really cool aspects that gives sort of a democratic feel to cryptocurrency. You can mine it like gold. There may be a limited number or a limited time, 2140, or a certain number of coins that are possible to get. And of course, this will increase the attractiveness of owning one of these coins, like Bitcoin. But with mining, you can verify when you add a block to the ledger, it's math that's hard to solve but easy to verify. So that's kind of cool. The first person then to supply the hash value can get the credit, but then other people can see, right, what happened and recognize that there is a new coin, there is a new hash, etc. Some of the political issues that go with this, though, for example, electricity, compute power, the hash rate, carbon footprint, These all cost time and money and effort, and you've seen some of the big operations in Iceland and China and elsewhere that yield Bitcoin, such that you might need to participate in a mining pool now to have an effective hope of mining Bitcoin. But this has led to crimes such as cryptojacking and CI/CD abuse, stuff like Wanamine versus Monero. Not only sort of at the criminal individual level, but the political ramifications at the national level. So Venezuela has thought to use, Bitcoin to counter hyperinflation. But if your country hasn't had good economics prior, the best case, of course, is El Salvador right now to look at. Can the power of volcanoes be used to mine Bitcoin? Can Bitcoin be used to stabilize an economy or to make it independent from world strictures? And those are open questions, really. But if you look at North Korea, they're using Bitcoin certainly, as well as other types of digital operations, including cyber crime, to skirt economic sanctions, right? And so you can be sure that other nation states are going to then have a say, including specifically at the European Union, might be a good place to watch the development of policy. Why? Because it involves sort of a consensus protocol among dozens of other countries, right, to determine what we should and shouldn't be doing in economics and politics. So the benefits of cryptocurrency start at the user level, right? So at the individual level, it gives me some freedom, right? Some level of ownership with confidentiality, with lower cost, P2P. It can be transnational. There might be an ROI in terms of investment. I might find credit, right? A line of credit. I might be able to trade assets, baseball cards or something. The societal impact is clear. There's a financial inclusion, not only for maybe an individual, but for a small country like El Salvador. There's a dissemination of power, right, from the state to the individual, which again, in my opinion, may slow the whole thing down. Rich investors are also very attracted by the market cap, the spreads, as well as, introducing some level of risk management into their portfolio. They can see the returns, but they might be manageable, right, if they keep it low and keep it safe. I'm concerned, though, that only the security conscious or those who can afford to buy the security may be better off in this space, and we'll get to that soon. But the risk of losing your Bitcoin is also quite real. So let's talk a little bit about political potential at the strategic level. I spend a lot of time in Estonia. I'm very fond of the digital nation. And e-government, digital democracy, supporting the rule of law, transparency via digital IDs, online voting. These are things that Estonia is leading in. And I even think that they're doing a good job exporting to the world ideas for promoting human rights, anti-corruption, data reporting from anywhere, from little people interconnected by the internet. All of these things, which are part and parcel of blockchain, which is intimately tied to Bitcoin, are really worth thinking about as we invest and believe in these technologies. Central banks, via monetary policy, they specifically want financial stability. And they will monitor cryptocurrency use and growth. And to some degree, we're going to have to follow their guidelines to see if it's a good investment, right, as part of our portfolio, that we can grow it. Cryptocurrency is mostly legal in the West, but really all laws related to terrorism and money laundering and tax payment, consumer protection, investor protection, they all have to be followed, right? And so these are things, as we look at the marketplace and as we think about investing, are important, right? Because again, I think that Bitcoin and blockchain, as well as cryptocurrency in general, have huge strategic potential, right, for the planet. But you have to watch how the marketplace and how governments and organizations respond. Like in the US today, it's okay to accept cryptocurrency payments, but taxes have to be in US dollars, right? So, but we've already seen, things in the NFL over the past week, for example, Tom Brady paying with Bitcoin for football. So things are going to change, especially as celebrity power, political power gets involved. But it'll be fun to watch. Let's move on to some security issues that need to be thought about. So if one were to make significant investment in cryptocurrency, there's a lot to think about. For an owner, there is a learning curve. There's a quick evolution in the technology that you'll have to keep up with. And then there's, the general risk to your wealth or your savings, always to keep in mind. At the regulation national level, expect changes in insurance standards, custodianship. At the infrastructure level, you have to think about the supply chain you're dependent on. Hacked exchanges, for example, software updates that may be opaque, to your understanding. Governments may become uncomfortable with the computation and electricity costs and mining, where it's done, maybe human rights issues associated with that. Are you comfortable with market manipulation by nations or large holders whom you do not know by name? There's a presumption of internet access. So to some degree, it seems like you're hostage to politics. And you may say, well, it's always been that way, and that's true. But if you think about the number of people who've lost access to their Bitcoin, access to your hardware and access to your passwords is really key. And then to say something is dependent on cybersecurity is again, there's a myriad problems to deal with, from hacking and malware, phishing, extortion, cryptojacking at your company. So as though the legitimate use of cryptocurrency rises, it's pretty simple math. You can expect that crime is likely to fall. The percentage of high-risk exchanges is currently falling. There have been, over the past year, a number of executives arrested, and then law enforcement is keenly focused on this know your client problem, which entails some challenges philosophically for cryptocurrency. At the same time, if law enforcement feels that it can see a little bit better KYC, then then maybe your investments are safer indeed. So now let's talk about some security things that you can do proactively and to prepare for protecting your investment. I would say, in general, 3 elements to think about are physical security, cyber security, and human security. Your private keys are your digital identity in the cryptocurrency market. They allow you to trade cryptocurrency online. If your private key is stolen, a thief can commit cryptocurrency fraud. So with your wallet, there's a few different kinds. A cold wallet or a hardware wallet has no internet connection per se, is a good way to go. Paper wallet, don't forget to laminate it so it doesn't get destroyed by moisture. If you have multiple wallets, which, diversification is always nice, you've got multiple, issues to think about for each. Don't forget to print and save your backup words, right? So that you don't lose access. PKI and digital signatures are important to get your mind around. A key pair stems from a random number, and many hacked wallets in the past really have had no good random number generation. And so they didn't provide the level of security, that one would want. So in general, cybersecurity hygiene. Device security involves antivirus, patching, firewalls, network security, VPN, no public Wi-Fi. At the human level, passwords are important, something that is hard to forget, but easy to remember is a challenge. Make them unique, use multi-factor authentication, and always beware of social engineering, especially if you're rich. Phishing, adware, email, attachments, links, all of these things. I worked for 2.5 years a little while ago as a data scientist at a cybersecurity firm, and boy, we really saw the avalanche of adware during that period, and much of it, I think, was initial recon for more serious types of attacks. So what's the verdict? I think in the near term, cryptocurrency is not about to replace the US dollar as reserve currency. But over the horizon, anything is possible. And in this day and age with modern communications and the internet, change happens faster than ever. Cryptocurrency clearly has unbelievable potential for both financial and political changes. It will be a catalyst and a challenge to the current system. But it's going to have to overcome some performance issues, scalability issues, efficiency, trust, speed. It's going to have to be interoperable with legacy systems. Visa currently is pretty much real time. And by comparison, Bitcoin is really slow. The sustainability issue at the political level, what about blood coins, like blood diamonds? Maybe people won't care, maybe they will. Digital things have so much more potential because of the ability for scale and speed. The things might be hard to predict. Today, the security risks are still fairly high, and the payment system is slow, but with credit cards, it took about 15 to 20 years for laws to catch up with the issuance of credit cards. Things are hard to predict. Remember the cell phone minutes in Kenya? So 4 big areas to watch are code, the marketplace, or people using the code, laws, and then norms. Ask your friends and see what you think. The central banks seek financial stability. They seek to invest or to protect the investing public. And then financial firms, watch what they do. This is their business. They're not so dumb. It's their job. And as they adopt and adapt, you can feel more certain about buying in, and trust will grow around the world. Okay, some parting advice. bear in mind, my disclaimer, I'm an information security analyst. I'm not a financial expert. And so these are things I found on the web that can help an investor to think. Three key elements of investment: consistency, emotional control, and tax planning, right? These are just things that you've got to think about, death and taxes. If you invest in cryptocurrency, have a plan. Is your plan primarily wealth preservation or wealth creation, right? Those are two big questions to ask yourself, and that goes to ROI. And when you think about a return on investment, timing the market, as I see the experts say, historically has been considered to be mostly luck. Very hard to predict the future, so be careful. An example plan is to define what you mean by value, what you mean by opportunity, set goals, calculate risk, invest in security. Then make a small purchase, right? That's a small part of your portfolio. Monitor and evaluate it and start over, right? Always think soberly about these things so you don't wind up on the block with no portfolio at all. There's no doubt there's a lot of money to be made in fintech. There will be a lot of money to be made in cryptocurrency, but as we've seen, there have been quite a few losers. There's space to earn money, but you should assume that buying into cryptocurrency is a high-risk investment. Make it a small fraction of your net worth or your investment inputs. And you can think of CC, if you want to be more Machiavellian, as a binary investment. Decentralized global cryptocurrency is going to work or it's not, right? And that means that the value, let's say, of Bitcoin could be the most valuable asset in human history, or it could drop to zero, right? And so sometimes when you buy into stocks, they always say, this could drop to zero. Be aware about that. In life, they say it's unwise to be a minimalist or a maximalist, so you can think about that as well, occupying some middle ground. And then, when we see, Tom Brady and Elon Musk promoting Bitcoin, you think about, what would be a significant investment to them. They can afford to lose their Bitcoin. Can you or I? And that's a whole other question, right? So, Dallas, Fort Worth, BSides, thank you very much for your time. My name's Kenneth Gears. I work for Very Good Security, and I'm happy to take any questions on this topic. Thanks a lot, and take care.